I'm from. This is Ria from SAMAYA, and today we are going to discuss about audit of banks. Okay, why do there is a special kind of chapter only for banks? Why can't this the standards of accounting would suffice the audit of banks? Because banks were in a very competitive environment, and they have a regulatory framework which is aligned with international best practices. Why like that? Because banks have more of forex transactions, and it involves various kinds of people all around the world, and it also have branches all around the world, so it has to meet those international standards also. That is why, since they have a very kind of public money involved, as they accept public deposits, so mostly the regulations also very high. So because of that, we require some special considerations for the banks to audit. Now I'll see what are all the bank characteristics. You see, these kind of words you cannot memorize it and retain for a longer period of time unless it's a direct question or any kind of dates or due dates like that. How could you manage to write answers in examination with regards to such kind of questions? Were, you see, what we think of banks. When we think of banks, we think of their transactions, banking transactions, and how those banking transactions have been conducted nowadays through internet banking, GPay, PhonePay, QR codes, etc. Right? That is what involvement of IT. Because there's a lot of public money involved, there's also so much of regulators have been stringent regulations have been there, so that the bank should comply with that. So with regards to these three things, we'll write whole any question from the bank with regards to these three topics like transactions, IT, and regulatory. And because how about the large volumes of transactions? What do banks have? Banks have transactions which are of large volume. Transactions initiated in one location and managed at another location, like checks, demand drafts, etc. Direct initiation of transactions by customers, like ATM transactions. Significant commitments with off-balance sheet items like bank guarantees or letter of credits. Integration and linkage of national and international systems like Nostro accounts. And regulatory requirements often influence accounting and auditing practices. For every question in bank, what you have to write like just a gray area. You have to write for everything about its regulators, because there's so much of public money involved. Whenever there was any answer or any question that was asked in banks, mostly they asked about the regulatories. You have to at least mention at least a point with regards to regulatories. And with regards to banking transaction, what we have discussed, large volume of transactions initiated in one location and managed at another, direct initiation of transactions. These all are with regards to transactions. And significant commitments of off-balance sheet items. These are also transactions. Integration and linkage of national and international systems. Regulatory requirements often influence the accounting and auditing practices. About the regulatory requirements, what are the special audit considerations we have to take with regards to banks? That's what the purpose of this bank audit chapter. Particular nature of risk associated with the transactions, obviously, the risk with regards to the transactions. Scale of banking operation, as we have already seen, there were large volume of transactions for a bank. So there was a large scale of banking operation. So the exposure was so high in a very short term period, like call monies, etc. And continuity development of new products and services. A wide range of loans or schemes or debit cards or new plans of credit cards were often released by banks to meet the competitive environment here, because banks have a very competitive environment. Extensive dependence on IT to process transactions. Obviously, what we have discussed, net banking, ATMs, these are also kind of IT. Statutory and regulatory requirements. See, this is comes every time. Regulatory requirements. What are the special considerations with regard to transactions? Because transactions risk and the scale of transaction and its products and services have newly introduced. They develop new products often, and an extensive dependence on IT and regulatory requirements. Everything revolves around transactions, IT, and regulatories. And they have been talking so much about regulatory authorities. What are the acts under which banks get governed? These were all the banks. You see, you need not remember anything. This is just like a for your information. Nobody asked these list out all the acts that were governed by the banks, that banks get governed by. You just give it a one time go, and before the examination, if at all they ask whether this act comes governs the banks or not in an MCQ for a mark or two, you could easily write that. We'll just we'll just read it one time, and we'll go to next topic. Banking Regulation Act 1949, State Bank of India 1955, RBI Act 1934, Companies Act Banking Companies Acquisition and Transfer of Undertakings Act 1970, RRBs Act 1976, Banking Companies Acquisition and Transfer of Undertakings Act 1918, Information Technology Act 2000, PMLA Act 2002, SURFACE Act 2002, Credit Information Companies Regulation Act 2005, Payment and Settlement Systems 2007, Cooperative Societies Act 1912 of Cooperative Banks. For cooperative banks. That's it. And financial statements of banks. What kind of forms that in which forms do the bank should prepare their balance sheet? In Form A, balance sheet, Form B, P&L account. You see, Form B and uh, balance sheet were in a crisscross manner like this. It's so simple so that we don't get confused in examination. So think of like this. This is B, okay, of the third schedule of Banking Regulation Act 1949. Okay, who are the authority appointing the auditor? As we auditors, who appoints us? For a banking company, it is appointed by AGM. Sorry, it is appointed in AGM by shareholders. Before that appointment, we have to take prior approval of RBI. For a nationalized bank, board of directors appoint us. But before such appointment, we should take the prior approval. Not we, banks should take the prior approval of RBI. For SBI and RRBs, CNDG and concerned banks gives the appointment. They have to take prior approval of central government. Why for SBI we have to take prior approval of central government is because that it's a public sector undertaking, right? That's why CNDG appoints the auditor in with prior approval of central government. For any banks, RBI is the most the regulatory authority we have to take prior approval for because it's a public sector undertaking. Even RBI is RRBs. For RRBs, the concerned bank appoints with prior approval of central government. They need not go for the RBI. All small banks and banks that were having a share of central government takes prior approval of central government. All other banks, any banking company or nationalized bank takes the prior approval of RBI. That's it. And now we'll see what's the bank audit process. For the first stage, we have to talk about the initial considerations. When we think of initial considerations, what should come in our mind is SA 200 series, all the 200 series, with regards to prior to the acceptance of and continuance of the audit engagement, what the auditor should consider. The assessment of engagement risk, which affects the decision of acceptance and continuance of audit. Yes, as per SA 210, agree to the terms of engagement in engagement letter to prevent any confusion. Assignment of qualified and experienced professionals for managing engagement risk. You see, all this comes in SA 200 series, right? All 200, 210, 220. Assessment of engagement risk. What do we have to? We have to check whether we should accept or continue the engagement or not. That's the first point. And as per SA 210, we have to agree to the terms of engagement. And later on, we have to check for our competence, right? We have to check for our competence. Assignment of qualified and experienced professionals for managing the engagement risk. And RBI decided that this is a normal kind of regulation that internal auditors cannot be appointed as a statutory auditors. This is what they have said. RBI decided that the audit firms associated with the internal assignments in the bank during the same year should not undertake the statutory assignments. Communicate with previous auditor. There's also SA 200 series. We have learned that bank should obtain declaration of indebtedness from auditor. These two were some special points with regard to RBI. Others were with regards to SA 200 series only. They have to take declaration of indebtedness. The auditor should not take loan from the bank. That's what the condition is. After that, the stage 2, it's about understanding. When you think of understanding, what comes in our mind? SA 300 series. Understanding the business environment, including its internal controls, right? The same thing is applied here. Understanding bank's environment, including its internal control, what it does to it enables the auditor to identify and assess the risk and develop an audit plan. Obviously, understand why do we have to understand bank's accounting process? Because what accounting process does, accounting process produces financial and operational information. What we went for, we auditors went to check the financial statements, so we have to go through how the financial statements have been prepared, and this accounting process contributes to internal controls also. And why we have to check for why we have to understand the bank's accounting process is to identify and assess the risk of material misstatement, whether due to fraud or error, and to design and perform further audit procedures. Understanding bank's risk management process. Why we have to check for risk management process that were in our entity? Because we have also gone to check the internal controls, right? We have to also provide a letter of weakness with regards to internal controls. Now we'll see how the risk management process was within the Indian entity. First, we have oversight by TCWG. Why do we need to understand the risk management process? It's because we have to also check for the internal controls. Because we have to give letter of deficiency, it's a matter of weakness, right? So that's why we have to check whether what the risk management policies that were given by TCWG. What the TCWG do? It approves the risk management policies that are consistent with bank's objectives, strategies, and regulatory requirements, and the type and amount of risk that is acceptable. Okay. Do we need to remember all the things that were in the brackets? No. But just give it a go. Just one day before the exam, read it one time, and you could write it easily. That's all they ask. You say it's not so much important. And what's the second thing? What after the implementation of policies, what do? They identify and measure and monitor the risk against the pre-approved limits and criteria. Pre-approved limits and criteria were in risk management process. In entity, they have to identify the risk. Okay, what's our golden rule after any kind of identification of any irregularities or risk? What we have to do? We have to put some remedial. We have to give some remedial measures, and after giving remedial measures, we have to do follow up or checking those remedial actions whether they were consistently applied or not. Okay. After identification of risk, what are they doing? What they are doing control activities like segregation of duties, verification and approval of transactions, reconciliation, fiscal security, and contingent planning, like why. And after that, what do they have to? They have to monitor. Monitoring activities like risk management models, methodologies, assumption means they are putting some systems or models in order to follow up the process conducted by independent risk management unit. Okay, after that, reliable information system. What's the output? We need to, what do we want? We want a reliable information to prepare the financial statements, financial and operational information on a timely and consistent basis, and that's it with regards to risk management process. Oversight by DCWG, that is approval of risk management policies, identification, measurement, and monitoring of risk, and control activities, monitoring activities, and reliable information system. That's it. Now we are moving on to the third stage of our bank audit process, that is risk assessment. Again, 300 series. What the risk assessment is mostly talking about, the risk of material misstatements, fraud, IT, and outsourcing. This outsourcing is something you have to write in the third stage. Even if you don't remember, there's no problem. Write the first stage, you're good to go. Identifying and assessing the risk of material misstatement as per SA 315 and assessing the risk of fraud, including money laundering, SA 240. Okay, there were so much of standards that were going on, right? We are also had a PDF that was in our Telegram, and we also launched our PDF where all the standards that were prepared as per auditing pronouncement. As most of us don't read the auditing pronouncement, even I does when I was in studying like you. And one of my friends suggested me that auditing pronouncement is the only book that separates the rankers and the passed outs. So I just highlighted that and read all the auditing pronouncements, and then I prepared that for the exam. And I wanted to make it like a book and also make it available to you too. And if you want to buy and have a colorful notes, you could buy it from the link was in our about section. And if you don't have that much time to wait for the book to come, you could also take a printout of the book or PDF that was already available in Telegram. Do check it out. I think it would be very helpful for you. And it has not skipped any single point that was relevant for the exam, and it was not included any single point that was irrelevant for the exam. And with that said, we'll just continue our risk assessment process. Here's what we have to do. As they're saying about risk assessment, we have to talk about the risk of identifying assessing the risk of material misstatement as per SA 315. Assessing the risk of fraud, including money laundering, SA 240. Why money laundering they have included? We have seen here, right? Even money laundering, PMLA Act was also governs the audit of governs banks. As a specified risk of financial statement level of banking industry and often use of IT. They're talking about again IT here, and risk associated with outsourcing activities. 315, 240, and as a specified risk at financial statement level and a risk with regards to IT. That's it. And this is all the stage 3, which is so simple if you think of 300 series. And 4 is execution, which is most important part. That is engagement team discussions. You see, whenever there's an execution that was going on, you have to talk about mostly with regards to, let's say, 500 series. 500 is mostly with regards to during the audit process, like engagement team discussions that we have during the audit. Response to the assessed risk after identifying the engagement risk that was happening in 200 series and all, and 300 series is about the planning that is just before the audit. And what do? After having that risk that were identified, we respond to that. I say 3:30. And overall audit strategy involves key engagement team members and overall, audit planning memorandum, audit materiality, consider going concern. You see, these were all like a 300 series, and this is all talking about the audit strategy, audit plan, and audit materiality concept. These two comes in a category wise. When you remember something in a category wise, it's easier to remember. And going concern is 500 series, and we are talking about stage 5 audit reports. You could go and refer whatever you remember in SC 700 series. Like think of, you see, mostly these were asked not in a direct question, in a situation based question. You could just refer to that and write, okay, this is most persuasive evidence, and it has more of risk of material misstatement, and there was a disclaimer of opinion should be given, no sufficient and appropriate audit evidence have been obtained, and you could write anything else you remember, and that's it with that. And we have audit planning memorandum here, right? We'll see the definition of audit planning memorandum here. It's a summary of audit plan. Okay. It since memo is a short form, right? We are talking about audit plan. It's a memo. That is, it's in the question. It's in the title only itself. It is a summary of audit plan. Okay. To describe the expected scope and audit procedures. It's describing the audit plan now. It's talking about the scope and audit procedures that have to be performed to highlight all significant issues and risk. Why memo? Why there should be a short form for the scope and audit procedure? It highlights all the significant issues and risk to provide evidence that planned the audit engagement appropriately. They're talking about the benefits of such audit planning memorandum is that it provides evidence. Obviously, it provides evidence for that audit engagement was planned appropriately and responded to engagement persuasive and specified risk. That's it. This is what definition of audit planning memorandum. And what are the special considerations for IT environment? Not only with regards to bank, if you get in IT risk in automated environment, or 2-3 times in our audit syllabus it repeats. So you could write these points only whenever remember only one question and repeat that, and try to personalize that. If they are asking about something in an automated environment, you could do some customization over there and use that specific words. That's it, nothing much over that. We'll also discuss how to write audit answers in examination by reading minimal content, and that's what smart revision also called. And okay, here are the special considerations for IT environment. We are talking about categories, right? Categories of IT, bank or transactions, or bank transactions contain some data, and the bank's transaction, how they are performed with use of IT. And we have reports and controls over here. We'll see what are the special considerations in IT environment. Overall IT policy structure and its environment, accounting manual and critical accounting entries, their process and involvement of IT, process of general information to disclosures in financial statement and involvement of IT. This is all about IT. Since as we have discussed here, right, in risk management process, there are about the risk management policies, right? Here also, with regards to IT environment, they're talking about the IT policy, IT structure and its environment. And accounting manual, whenever you go for a bank audit, you will get a manual, right, for the bank managers to comply with few kind of certain regulations, or like how to do what and how to do what. Uh, and they're talking about that, and about the critical entries, accounting entries, and the process of generating information to disclosures in financial statements and involvement of IT systems. And with regards to data, data processing and data interface, data integrity, and data security. Data processing is like how a general entry was traveling through P&L account, trail balance, and balance sheet, and data interfaces like a format of report, how the data is being shown, tables, charts, or likewise. Data integrity is like it is not contradictory. One data set is not contradictory with the another. They were integrated together. And data security, obviously, when it is maintained in a IT environment, and like a lot of data security has to be in place. And with regards to reports, MIS reports, MIS reports generation and that periodicity. That's what we chartered accountants do when we go for an industry. We do mostly MIS reports, unless we go for a big four. Major exception reports, including embedded logic. Most of us in our bank audit had checked for the exception reports. And with regards to controls, business continuing plans and disaster control plans. Control over account heads, expense booking, and overdue identification. and controls on recording products and channels of e-banking and internet banking. They're talking about the internal controls here. You are talking about the going concern concept, and here about the whether the management had some significant influence which they are using for undue purposes. They're talking about this controls over all the accounting side or expense booking or overdue identification, not overdue identification, but they have specially mentioned it because it helps the it helps the window dressing of the banking financial statements with regards to NPAs, etc. Controls on recording products and channels of e-banking and internet banking. And with regards to that, and moving on to next topic, key security controls that the auditor need to address in a computerized bank audit. What security we have to talk about? We have already discussed that for data we have to need data security, and with regards to that, in addition to that, human security is also there. That is, involvement more of human could lead to some irregularities in internal control system. Internal control system might not be that efficient. We'll see how it could be. Processing authorized, accurate, and complete data. You see, the data has to be first, it has to be authorized and it has to be accurate, and all the data has to be processed. That is, the complete data has to be processed. And in case of power or processing failures, the system has to resort without distorting the completion of entries and records. And the system prevent unauthorized amendments to the programs. This is all with regards to data. It's mostly about the processing of the data, and the system has to restart, and there has to be no unauthorized changes to the programs. And with regards to human, verify that changes made are in parameters are authenticated. That is, they have to be the changes have to be made by the designated person only who have authorized. Verify that segregation of duties ensured while granting system access. We have seen some segregation of duties somewhere here, right? With regards to control activities, segregation of duties to reduce the risk in management risk assessment, risk management process. And verify all account master and balance can't be amended except authorized personnel. They're talking about the authentication of the person and the data. With regards to the data, it is only the authorized personnel have to amend the programs here, and all the account masters, etc. here, and the segregation of duties over granting system access. And all the security controls were here with regards to data plus human here. And we'll move on to the next topic, that is Central Audit and Inspection Department in banks. It is headed by Chief Audit Executive. It's RBIA, that is Risk-Based Internal Audit, stipulated by RBI. We have often seen that there was a HO inspection that happens in branches, right? They're mostly talking about that, and identifies branch for revenue audit, appoints concurrent auditors and review works of concurrent auditors. It's mostly like an audit committee for audit committees with regards to the company. Here, in kind of bank, it is Central Audit and Inspection Department, stipulate as per RBI, which was headed by the Chief Audit Executive. And what does it do? What functions it have? It has to undertake risk-based internal audit for what? It has to identify branches for the revenue audit, and appoints concurrent auditors and review the work of concurrent auditors. Obviously, we have to review the work, those who appoint, who gets appointed by us, right? Concurrent auditors we appoint and review the work of the concurrent auditors. With regards to concurrent auditors, what we have to do? You need not remember this. There's a separate section for concurrent auditors also, but just remember simply determine the scope. That's what we do, obviously. Meetings with the concurrent auditors and discussing the issues and training. This is simply any kind of regulations or any kind of duties that anyone who appoints an auditor should perform. What do they have to check? They have to check for the scope, and they have to give meetings. They have to attend the meetings, or they have to meet with the concurrent auditors, and they have to discuss the issues and training. And now we'll see in detail what is risk-based internal auditor. It's identification of inherent business risk, assessment of level and direction of various risk areas, and overall business and control risk, assessment of effectiveness of control, and drawing risk matrix. You see, first, anything that's related to risk, what we have to do? We have to identify that risk. What risk? Inherent business risk. Okay. Then what do we have to assess? Assess the level and direction of. We have to assess the risk, right? What risk, in what matters or what parameters, the level and direction of various risk areas. Okay. And overall business and control risk. Okay. You see, here this mostly talking about inherent business risk, right? That's why they have concentrated on the level and direction of business and control risk. Assessment of effectiveness of controls. Okay. And controls were something like control activities. Since we have identified risk here, what we have to do? We have to put a remedial actions. What are the remedial actions? The control activities. We have to check for the effectiveness of those controls. And we have to draw the risk matrix. That's a tabular form of diagram. And that's it with risk-based internal auditor. Now we'll